My friends, I want to sit with you today, not as a teacher above you, but as a fellow traveler who has walked a long road and learned a few lessons along the way. You and I, we've reached that stage of life where we have more behind us than ahead of us. We're not chasing the next paycheck or the next promotion anymore. We're thinking about protecting what we have, making sure it lasts, and maybe, just maybe, passing something on to those who come after us. And in these years, when the world seems louder and scarier than ever, I've found comfort in the wisdom of one man, an investor named Harold Whitman. Now, Harold isn't a flashy Wall Street character. He never bragged about quick trades or wild bets. He lived quietly in the Midwest, far from the noise of financial headlines. But his way of thinking has helped me, and I believe it can help you too. Harold Whitman once said something simple yet profound. The stock market is a device for transferring money from the impatient to the patient. Think about that. Not from the poor to the rich, not from the weak to the strong, but from the impatient to the patient. Now, patience is something we older folks understand. We've seen wars and recessions, booms and busts. We've buried friends, raised children, and worked through decades of change. Patience has carried us through life, and in Harold's world, patience wasn't just a virtue, it was a strategy. Harold also had another saying, be fearful when others are greedy, and greedy when others are fearful. Sounds clever, doesn't it? But it's more than a phrase. It's a way of seeing the world differently. When markets crash, people panic. They sell, they hide, they freeze. And yet Harold would step forward not because he loved risk, but because he understood value. He knew that fear doesn't destroy a good company. It only changes the price tag. When prices fall faster than value, that's not a tragedy, it's an opportunity. Let me take you back to 1973 and 1974. Some of you might remember those years all too well. Gas lines snaked down the streets. Inflation ran wild. The stock market collapsed, dropping nearly 50%. Folks watched their savings evaporate. Most people ran for cover. But Harold, he quietly bought shares of a newspaper company, the Washington Post. The stock was trading for about $6.50 a share. Harold believed it was worth closer to $20. He didn't shout it from the rooftops. He just bought it. Slowly, steadily, with conviction. Years later, that little purchase turned into over $1 billion. He once remarked, the best thing that happens to us is a market crash. Imagine that, calling disaster a blessing. But to Harold, it made perfect sense. Crashes weren't the end. They were beginnings for those who were ready. Here's the thing, though. Harold didn't wait for recessions to start preparing. He prepared in the sunshine. While others partied in bull markets, Harold built cash reserves. He resisted the urge to invest just because prices were rising. He understood something most people forget. Cash isn't just safety, it's ammunition. When downturns came, he had the resources to act, and act he did. Do you remember October 19, 1987, Black Monday? The Dow Jones fell 22.6% in a single day, the biggest one-day loss in U.S. history. Billions vanished before lunch. Investors froze. Some never came back to the market. But Harold, he didn't flinch. He saw Coca-Cola's stock fall to under $3 a share, adjusted for splits. He had studied that company for years. He understood its brand, its global reach, its pricing power. So while others trembled, Harold invested nearly $1 billion into Coca-Cola. He eventually owned over 6% of the company. And do you know what that investment does today? It generates hundreds of millions in dividends every single year. Harold didn't chase price, he chased permanence. Fast forward to the late 1990s. The dot-com boom was everywhere. Companies with no revenue, no profit, and barely an idea were going public at sky-high valuations. The Nasdaq climbed over 5,000. And Harold, he was mocked. The newspapers called him old-fashioned. CNBC anchors said he'd lost his touch. Everyone laughed because he refused to buy internet stocks, but Harold held firm. He didn't invest in what he didn't understand. He waited, and then the crash came. Between 2000 and 2002, the Nasdaq fell 78%. Companies disappeared overnight. Fortunes vanished. But Harold, he bought companies with real strength. Johnson & Johnson, Procter & Gamble, Moody's. Businesses with products you and I use every single day. When others lost everything chasing trends, Harold built his fortune by avoiding them. Now nothing tested Harold like 2008. Lehman Brothers went under. AIG needed a massive bailout. The S&P 500 dropped nearly 40%. Banks stopped lending. Fear was everywhere. Harold was 78 years old at the time. He could have retired quietly and said, "I've had enough." But instead, he invested $5 billion into Goldman Sachs. The deal guaranteed him a 10% annual dividend plus the right to buy more shares at a fixed price. He later backed Bank of America, General Electric, and Dow Chemical. While others panicked, Harold wrote an op-ed in the New York Times, "Buy American. I am." He told the world he wasn't just investing his money, but his family's money too. Within a few years, those investments paid off handsomely. Berkshire Hathaway, his company, doubled its market value. In 2009, Harold made one of his boldest moves. He bought Burlington Northern Santa Fe Railroad for $34 billion, the biggest purchase of his career. Critics said he was crazy. Freight volumes were down. Unemployment was high. The economy was still reeling. But Harold saw something others didn't: the long-term strength of America. Today, that railroad delivers over 10 million carloads annually and contributes billions in profit every year. That wasn't just a deal, it was a declaration, a bet on America's future. How did Harold keep so calm while others panicked? It wasn't magic, it was mindset. He didn't read headlines for emotion. He read balance sheets for truth. He once said, "The market is there to serve you, not to instruct you." When prices fell, he didn't ask, "What is everyone else doing?" He asked, "What is this business really worth?" And because he always kept cash in reserve, often more than $100 billion, he was ready when fear arrived. Calm wasn't passive, it was practiced. Harold didn't wake up fearless. He built courage brick by brick. In his early career, he read 500 pages a day. He studied thousands of companies. He trained his mind to think in decades, not days. He used to tell students, "Predicting rain doesn't count, building arcs does." That's the lesson, isn't it? Don't waste energy predicting storms. Build your arcs so you're ready when they come. Even in recent years, Harold showed us again. When the pandemic struck, the market fell over 30% in just 23 days. Airlines collapsed, oil went negative, but Harold didn't rush. He waited, he read, he watched. And when stability returned, he invested billions in energy and telecom. He bought pipelines, Chevron, Verizon. To Harold, a crisis wasn't chaos, it was clearance. So what does all this mean for us? Those of us in retirement trying to make our savings last? It means we shouldn't panic when the market falls. A 30% drop isn't a 30% loss unless you sell. It means patience, not speed, is our edge. It means we should invest in what we understand, in businesses that endure, not in the fad of the moment. And most of all, it means we should prepare in the good times, keeping cash, staying disciplined, and reminding ourselves that storms will always come. My dear friends, Harold Whitman's life shows us something simple yet powerful. Wealth is not built from reaction but from restraint. Every crisis he faced became a transfer of wealth, from the impatient to the patient. And as retirees, we know patience better than most. So let us take comfort in this. The next time markets fall, when fear shouts the loudest, remember that value does not vanish. Fear only changes the price tag. And maybe, just maybe, that storm outside is really an invitation. to those wise enough, calm enough, and patient enough to see it. If these words have given you peace, encouragement, or simply a reminder to stay steady in uncertain times, I invite you to join me again. I'm Stanley Wolfe, and I share these stories not as a financial expert, but as an old man who has seen a few storms and learned to wait them out. If you'd like to keep walking this road of wisdom with me, please subscribe to this channel. Together, we'll learn how patience can protect us, guide us, and maybe even enrich us long after the headlines fade. Thank you for listening, and God bless you.